Good morning, traders. Good morning, traders. Today we want to discuss how to enter a trade in the third Elliott wave. How to enter a trade in the third Elliott wave. All right. All right. So it's quite challenging to enter a trade during the third Elliott wave because the price is moving very, very fast. All right. So the momentum is increasing and the price can go up sometimes in a vertical channel. All right. So it is quite easy for a day trader, for a swing trader to enter the trade at the wrong time and also at the wrong place. So how can one enter a day trade or swing trade during the third Elliott wave without losing? Because when one is day trading or swing trading, all right, the first challenge that we are facing is how one can time the market accurately. All right. So if a financial instrument is going up, all right, it's not going up in a straight line. All right. So the price is not going up like this. If though the price going up, there will be times when the price will pull back a bit, and then it will continue to go up. All right. And then it will pull back a bit again, and then it will continue to go up. But the price is pulling back in an uptrend, is retesting key levels. So how do we enter the third Elliott wave without losing as a day trader or as a swing trader? All right, very, very important. This will also answer the question that a trader asked me one time and say, how do you trade? How do you enter a trade when the momentum is quite strong? All right. So on my chart, I have some line already drawn, some channels already placed on my chart. And with those channels, we will be able to enter the third Elliott wave without getting too much into trouble. All right. But before we start talking about how a technical trader can enter the third Elliott wave, it is also essential that traders understand that the hedge fund, the big financial institution, will usually buy a call option. So they do not trade like a technical trader. They will buy a call option, all right, at the beginning of the third Elliott wave, and they will remain, okay, in the trade for some time. One more thing I need to explain to traders: if we are in a downtrend, they will sell a put option, and so they will not sell as a normal technical trader, so they are using options to participate in the third Elliott wave. All right. But one more thing I need to clarify with traders is that very often a lot of money, okay, is left on the table, so to speak, because market participants find it very difficult to hold their position for many months, even the hedge fund, because they don't know when the trend will change, and for those reasons, even a lot of traders that are catching the third Elliott wave may exit the trade prematurely. All right, but there are different okay points where we can enter the third Elliott wave. All right. Another thing I need to mention here to traders is that when we are trading as a technical trader, we must always implement a multiple time frame trading method. All right. So first thing first, a very simple tips that we can use is to draw a line that is connecting the low of the first wave and the low of the second wave. So because we have the first wave and the second wave, the financial instrument that we are looking at is NVIDIA Corporation, EPIC NVDA. All right, November Victor Delta Alpha. This is a technology stock, I mean an American stock, which is in the third Elliott wave, okay, right now. All right, we are on a monthly chart, and the price has went above, okay, that significant resistance at $25. That's the first Elliott wave, followed by the second wave. This is the second wave here, which are highlighted on my chart with the pink line. So first wave, second wave, we are now in the third Elliott wave. You need to understand that when we are talking about the third Elliott wave, or first wave, second wave, third Elliott wave, is relating to a specific time frame. Because that's why I always mention to traders, I'm on the monthly chart, I'm on the weekly chart, all right? So a trending phase on one time frame can be a mini trend, all right, a mini trending phase, okay, in relation to a bigger trend, all right. So by connecting the low of the first wave and the low of the second wave, we have the first line, which is the red line on my chart. Then we select the high of the first wave and we draw another line that is parallel to the first line. So this is the, then you will have this, okay, red channel. Once you have the first channel, all you need to do is to measure the width of that channel and to project it up. So the first projection allows us to draw the pink line that is parallel to the red line, and if the price goes above, okay, that line, which is the pink line here, we use the same, okay, width of the first channel and we project it again one more time. Now we have the orange line, and then we just project it as many times as we can. Okay, here we are again. This is okay, another projection bringing us to the blue line here, and if the price goes above it, we project it like this. Those lines or those channels will allow us to pinpoint, to time the market carefully, and to enter, okay, the third Elliott wave without too much trouble. All right, very simple. So if you look on this chart, you can see, and anytime you see two lines, so anytime you see two lines or a channel, don't forget the median line, okay? So you can see that the price breaks above, okay, the red channel, and it quickly ran into, okay, went to the pink line, which is the first projection, all right? So this is the first projection. It quickly went there. Now, you need to understand what is happening during the third Elliott wave. As traders have identified the first and the second wave, there will be bullish, okay, orders being placed above the high of the first wave. So a lot of orders will be placed here, a little bit up, okay. There will be a lot of order being parked here. Okay, this place will be littered with orders to buy. The reason is traders are using those orders to catch the third Elliott. You see how this candlestick bar is quite long candlestick bar. It's because orders that has been placed above the high of the first wave, okay, all right, were filled. So it was order filled, bullish orders being packed here. The price ran very fast this month here, all right. So you need to understand what is happening here. So if you are about to place orders above the high of the first wave, don't put it too close to the high, because what you need to do, once you draw this channel, if you want to place orders, personally, I will place it a little bit above, okay, this channel here, above the top of the red channel. That will be a better place, because you can see that the price did find a resistance, right? You see the doji here. Place it a little bit above that channel here. All right. So what you can do, as the third Elliott wave is underway and the price is now going up, if it reaches the top of the first channel, all right, if it's approaching the top of the first channel, then you can place orders just a little bit above that channel, okay, to buy. All right, that will be a simple strategy to buy. Okay. Now, as the price is going up, you can see that you look at the tail of this candlestick bar. Look at this one here. Okay, look at this one. Okay, so the candle, the price did open here and then pull back a bit. So what is the blue line here? This is the median line, okay, of the third channel. So the third channel is the channel that is formed between the pink line and the orange line here. So you can see that the price went to the top of that third channel. It pulls back near the median line. This is another bullish trading setup here. Break above the median line of the third channel, and then pull back. But if you don't know how to place those channels already on your chart, you won't see that setup. So it's very important to have the channel already in place and then project them as many times as you can and leave them on your chart. And you will be looking for trading setup, either price pulling back to the lower part of the channel or price pulling back near the median line of the channel. The opposite is also true in a downtrend when we are in a bearish third Elliott wave. I'm using here one example of a bullish third Elliott wave, and this is a good place. So after this pullback here, so if you are also using option to buy option, so you buy your first option, all right, probably you buy it after you see that the price breaks above the high of the first wave. That would be a better place because you don't know what's going to happen. All right, you don't know whether the price is going to find a resistance here because anything is possible. It may change direction here and start coming down. So you want to buy it as it goes above the high of the first wave, all right, or above the first channel. Then you buy your call option. Sometimes traders can buy call option here because they are not taking the risk that they are taking is only the premium, all right. So the time expiration, that's the only thing that is worrying. Okay, those who are using a call option. So they can buy here also, all right. So if you are confident, you know what you are doing, you can buy here and just leave it there, going out. And then when you are happy with your profit, you can just cash out, okay? All right. So by drawing those channels, you can pinpoint the best place. Look at the tail of this candle also here. You look at this one here, okay? So what has happened? So you can see that the first time the price went to the edge of the orange line, which is the top of the third channel, and then it pulled back near the median line of that third channel. Then it breaks above it. So you are looking for break above, retest. All right. That's what you are looking for. Break above, retest. If you're in a downtrend, you'll be looking for break below, retest. All right. That's what you'll be looking for. All right. So that's what you will be looking for if you're in a downtrend. If you're in an uptrend, break above. You see, it breaks above the orange line. Now it pulled back to retest it here. This is a bullish trading setup. And in all cases, though you are an Elliott wave trader, you will always follow the trading tree, the setup, the signal, and the low risk entry point, implementing a top-down trading method without violating the trading triangle. Do you think that this is useful for somebody who want to catch the third Elliott wave? Because the problem that a lot of traders that Elliott wave traders that clearly have identified that now we are in the third Elliott wave. Suppose you are buying here as the price was retesting the top of the second channel. You see that the price went down. So a lot of swing traders can get into trouble by buying here. So the price will pull back, taking them out of the trade before going up. But if you are in a bullish third Elliott wave, before you want to buy, wait for a pullback. And you want those pullback to retest one of those lines. Okay, that's what you are looking for. And this will help you to time your entry accurately. As a call option buyer, you can also see those pullback and then you buy another call option. So somebody who is using option, as you can see breakable, see here, you retest the edge of this orange line, the candlestick open here, and then you pull back. Okay, you want to look for those pullback, retest, and then buy another call option, one step at a time. All right, okay. Another thing that we need to pay attention to, because we have been recording video recently, we know what is a normal third Elliott wave. The normal third Elliott wave very often will end, not always, very often will end at 161.8% Fibonacci extension level of the first wave. All right, so you can see on this chart, so those are key levels you want to watch. So apart from those the projection of the channel, which I've already mentioned now, we can also watch Fibonacci key levels. The first key level that we can watch is the 161.8% Fibonacci extension level of the first wave. You see here, that's the green line on the chart. A lot of traders that have identified the beginning of the third Elliott wave at the early stage, all right, will be prepared to take some profit as the price is reaching the 161.8% Fibonacci extension level of the first wave, because they know that the normal third Elliott wave very often will end at that specific Fibonacci extension level of the first wave. So that's why you see how this tiny candlestick bar here. It's not by mistake. Okay, so it's here. People were acknowledging, Elliott wave traders were acknowledging the 161.8% Fibonacci extension level. So another point you can buy is when the price breaks above that 161.8% Fibonacci extension level and find a support. So you know that no matter the way will end there, but if he breaks above it and find a support, that's another bullish trading setup. And you can see the response here. You see again another tall candlestick here. So people are looking for opportunity to buy during the third area wave when the price breaks above the high of the first wave. Naturally, price going display a new high. So if you break above the high of the first wave and find a support, you see here it is boom up. Here it is boom. All right. If he breaks above the 161.8% Fibonacci extension level for the first wave and find a support, boom, you want to buy. You see those tall candles, those are smart area wave traders that are timing the market carefully, buying at the right time and also at the right place. Instead of buying here, you see, swing trading, you say, oh yes, it's in the third area wave, I must buy. You want to buy at the right time and also at the right place. Break a ball, retest. Implement a top-down trading method without violating the trading triangle. All right. So apart from the projection of the channel, we can use the Fibonacci extension level. There are other Fibonacci extension level where the professional buying. So apart from the 161.8% Fibonacci extension level, my recommendation to traders is draw on the chart as soon as the third area wave is underway. Highlight the 161.8%, the 214%, the 314%. This is where we are now. We are now at a 314% Fibonacci extension level. Those are the zone where the third area wave is likely to end. So the first level where the third area wave is likely to end is 161.8% Fibonacci extension level of the first wave. The second point where the third area wave is likely to end is the 214% Fibonacci. That's the line here. I'll color it down into black. The 214% Fibonacci extension level. So you want to map everything out with the channel and with the Fibonacci extension level. So if it breaks above the 214% Fibonacci extension level, you see this candle also here. It got small tail. What was happening here? You see this one here. You see the little bit. You see the tail of this candle. Okay. So the price you open here, try to go a little bit to retest the 214% Fibonacci extension level. It's not by mistake. All right. All right. It's not by mistake. All right. It's all happening. All right. All right. Though it's also the media line of the third channel is also trying to retest that key level. So here we are now 314%. If you want to buy, which I told traders, okay, you want to allow it, break a ball, retest, and then implement a top-down trading method. Don't just buy because it breaks above and retest, okay? Break a ball, retest, next step, implement a top-down trading method to trade it if the signal fell out, okay? So those are the points where professionals, okay, will look for entry point when they are trading the third area wave. All right. So the opposite is also true in a downtrend. We are looking for break below, retest, either the projection of the channels or the Fibonacci extension level. All right. All right. And also the low of the first wave in a downtrend, very important. Okay. And you want to look for break below, retest around the Fibonacci extension level. So now here we are. So we map it already here. We are now at 314. So we know that if the price goes, if the third area wave goes above the 161.8% Fibonacci extension level or the first wave, we know that we are now having what we call the extended, okay, third area wave, which can go up to 414% Fibonacci extension level. It can go to 461%, but my recommendation to traders, just highlight first 161.8%, 214%, 314%, 414%. And don't worry about any other key level. Those are the key level, my recommendation. at those key level, okay? So from here, if you find a support, so if you just draw the Fibonacci extension level, that's not enough. Draw both, all right? The channel, you see, so here we are, you see how, look at this one. You see, the price breaks above the 314% Fibonacci extension level, you see, here you went above it. But look, if you don't know about the projection of the channel, you don't know that there is a resistance here. You think that the way is clear all the way to 414. But by drawing the projection of the channel, you know that there's another resistance here. That's why as the price went above the 314% level, it went up near that red trend line there, and found a resistance. It's struggling now a little bit. Okay, you see? So both the trend line and the horizontal Fibonacci are key levels. Will that be useful for an Elliott wave trader to improve his or her entry during the third Elliott wave? Let me know in the comment section. But remember what we are trying to do, all right? We want to buy at a support level. When the price breaks above a key level and retest it and turn around. When he retested it, that's a bullish trading setup in a bullish third Elliott wave. When it breaks below and retests one of those key levels, it's a bearish trading setup. But the next step is to implement a top-down trading method if the signal fail come out. Because as we are in a third Elliott wave, the third Elliott wave can end at the normal third Elliott wave will end at 161.8% Fibonacci extension level of the first wave in that zone. All right, but you look here again. You see what the price did? It went above the green line. It's a 161.8% Fibonacci extension level. Yes or no? All right. But as he went above it, he was acknowledging. Look at that. He was acknowledging again. Look at that. He was again acknowledging the pink line, which is what the top of the second channel. So combine the Fibonacci and the trend line, and don't ignore the trend line. But a lot of traders, when they are trading the third Elliott wave, so sometimes traders, so they say, okay, we are now above, okay, we are now above, all right, the 161.8% Fibonacci extension level is going to be extended, we buy. So as a technical trader, you want to use stop loss, yes or no? If you're buying call option, that's okay, all right? But if you are trading, real trading, placing a trade, placing a stop loss, managing a trade, you want to pay attention to those trend lines, all right? So you don't want to lose, though you were right. You know that you are in the third Elliott wave, but your entry is not good. This is one of the problems that a lot of traders are facing. Some traders know when a stock is about to go up, but they are losing. Some traders know when a stock is going to go down, and they hold their head and say, what's going on with me? I can't enter the trade anytime I'm losing. But they were right. They know that the stock is going to go up. The only problem they are facing is that they are just buying or selling at the wrong time and the wrong place. When other smart traders are coming out of the trade or are doing something else and they be taken out. But not because they can't trade. They understand that this is the third Elliott wave, but they just lost. All right. Okay, so this is it. So what can I say? What can I say, my friend? So you can use, if you don't want to trade as a trader, technical trader, you can use option. All right, option. So I can assure you, traders find it very difficult to hold position. So few traders can even experience it. Few of them only can hold this trade since the beginning of 2016 up to now. So people are coming out at different stages. But then people say, all right, I already cash out. All right, if I stay in the trade, I could have made X amount of money. But there are other times when you can re-enter the trade. And how do we re-enter the third Elliott wave? That's the challenge. And one thing that you do not want to do, all right, my friend, one thing you do not want to do is to chase the price, okay, or to be impatient. Don't be impatient and don't chase it. You are not the only trader waiting for the pullback. This is one thing I learned when I traded first. A lot of the time, professionals sit down waiting for the price to pull back and do exactly the same thing. Don't forget about those kind of attitude when you say, I'm going to miss it, I need to buy now. All right, if I don't buy now, I may never, you'll be surprised. At the time you buy, that's the time when you're going to pull back. You don't want that, okay? You want it to pull back. You want to buy low. That's the pullback, okay? You want to sell high. Wait for a rally. All right. So this kind of attitude, work on it. Try to be a little bit disciplined. And if you are an impatient Elliott trader, pull yourself back a bit. All right. Anytime you feel like pulling the trigger, all right, it's like a takeoff, like a plane. You want to take off. The pilot, the most difficult part of the flying, the plane, is the takeoff and the landing. All right. So once they are in the air, they can do autopilot. All right. So, but taking off and landing, that's the challenge. Same thing for a trader. Entering the trade, exiting the trade, managing the trade. And with that, you will be able to improve your entry during the longest phase of a trend. This is the third Elliott wave, and you do not want to lose, though you were completely right during that time. That would be mad, all right? You don't want to make those mistakes. You want to get it right like a pilot taking off or landing, okay? And this is the end of this tutorial. If you have any question or suggestion, all right, put in the comment section, and I'll read the comment, what I'm doing. Some comment, you may say, oh, George, you didn't reply to my comment, but I read all the comments, and sometimes I may not reply session to your comment, but I may record another video when I will address directly your question, and you will have your answer if you are a subscriber to our channel. Sometimes I may go directly to the comment, and I will answer specifically to that comment. So do not feel like, Joe, we are friends, but you never answer my comments, okay? All comments are helping us, okay, to build this channel, to record more video. Put it there, all right? And know that, okay, my eagle eye will spot them and read them, all right? Okay? That's it for today. I will be recording another video, all right? And it will be about a practical, okay, Elliott wave forecast. When we can forecast, now, next step, so I'm inviting you to stay tuned, all right, if you like the video. If I see a lot of thumbs up, okay, all right, then I'll go to the next step, practical Elliott wave forecast for NVIDIA Corporation, okay, a bullish cow that is defying the gravity in the financial market, and I will do what we call a practical Elliott wave forecast. We'll forecast, okay, the fourth Elliott wave and also the fifth Elliott wave for NVIDIA, okay, a corporation. That will be a practical, all right, Elliott wave forecast. So we have learned how to forecast the market using the Elliott wave. So in the next tutorial, I will be talking about, okay, practical Elliott wave forecast, when we will focus on this financial instrument, focusing the end of the fourth Elliott wave and also the fifth Elliott wave. Happy trading to you all, and speak to you soon. We are the TSTWSYS008 traders, talking about how to enter a trade in a third Elliott wave. Happy trading to you all, and speak to you soon.